least I've been reading a lot over the last couple of years about this massive growth of quote private credit. Michael, do you want to talk a little bit about the companies that have used debt in your companies, and do you see that useful, or is it just not even worth pursuing in your experience?
Yeah, I'd say just sitting as a board member, you're exactly right. I think the fall of Silicon Valley Bank, the fall, we haven't seen WTI very active in the market. We saw some of these historical large players in the venture space really pull back over the last few years. And you're exactly right. We had a proposal from one of those banks for 90% of the loan to be held in a CD. So we've seen the banks become very, very conservative. Part of that is also a regulatory framework. There's been layers and layers and layers of regulation even since 2008 put on these banks.
So, at least I've been reading a lot over the last couple of years about this massive growth of quote private credit. Is that is that not available for early stage companies? Is that the later stage companies? Are you seeing availability?
I mean, I don't I know very little about debt. I do know that Franklin Templeton has a private credit group that we bought called Benefit Street Partners, and we showed them one deal in our portfolio, and they started asking questions like, "Where's the profit?" So we didn't show them any more deals. Uh, we like our companies growing extremely fast, such that they have amazing LTV to CAC ratios, so that it is economically accretive to go spend as much money as you can growing your business. And lenders tend to not like the idea of burning cash and lighting it on fire out in the backyard. And if you think having a VC might be a pain in the rear on your board, wait till you have a lender who's upset at you.